Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 8th. It's 6:30 as I'm starting the video. And don't forget to run that player at 1.5x. Futures, Bitcoin up 3.5%, oil up 3%, gold up 0.8. Equities are green, but mostly flat, like between 0 and 0.5%, something like that, but good to see green. Earnings front, Dick's this morning before the bell, and Century Casinos after the bell. Bumble, MongoDB, and Stitch Fix. There we go. After the bell, those were the three that jumped out to me. Of course, you can look on the blog site for the full calendar, or even go to Earnings Whispers for everything going on in earnings. Not much on the macro front today, but we'll have more at the back half of the week. Remember, we've got this big CPI print coming up. Everybody's, are we going to get an 8 handle on inflation? I wouldn't put it past anybody. I saw that Gas Buddy last night has the national average for unleaded at $4.10 a gallon. I know it's shooting up around here in Florida and across the nation, of course. I think as the gas prices go up, I think you're going to see more and more civil unrest. People are grumbling now, but they're not panicky. I think when we get up towards $4.50, $5 a gallon, which I think we will, you're going to see a lot of turbulence out there. But really, next week is the FOMC, Jay Powell's first, rate hike thing and his comments. And, if inflation comes in wacky, does he change his mind and go 50 basis points? We'll have to wait and see. Also, we've got March OPEX. Whenever we have a bad day or a series of bad days, everybody always starts asking a question, was that the bottom? Was that the bottom? Was that it? Do we head higher now? I want to kind of inform those questions for you because I think it's important to know, or at least have in your mind, where you think you're heading, and then let the evidence play out. You're not beholden to a theory of the case. You can change your mind at any point along the way, but hopefully that's evidence-based and not psychologically based. You want it to go higher, but the evidence keeps pointing lower, kind of a thing. So let's go through it. Oscillators. Bottom half of the range, but not extended. We could go to the New York oscillator. It'd be exactly the same positioning. Let's look at my extremometer. We haven't done that for a while. Measuring the bullish and bearish sentiment on the options market. And the thing that's nice about this is it's actually what people are doing and not saying. You can go to all these sentiment indicators, the AAII, bull, bear, blah, blah, blah. That's responding to a survey. At least this is telling you what they're buying. And I think that's a lot more concrete. No spike. No extreme put buying. Nobody is panicked. Right here in the middle, above the red line is extreme call buying. Below the green line is extreme put buying. And you can see back in time when we get these big spikes on put buying, it's done a pretty good job of finding lows. Much better job finding lows than finding highs. So anyhow, we're right here. Middle of the range, even trending a little bit bullish. So certainly not any panic in the put buying regime. VIX 30-minute. We've talked about the uncharacteristic move for the VIX, where normally you see a fast run up, really sharp, and then just as sharp a decline. This has been a grind higher, and yesterday, even on a 3% down day, you would expect this to do an absolute moonshot. I mean, yeah, it's higher. It was higher by 4 points, up towards 36.5, but that's not panic. That's not panic at all. I mean, even right here at 38, you saw the panic by the steepness of the VIX acceleration. Here it's just a wander higher. So I don't see any panic there at all. Also, if you see any mainstream nightly news, they may say the Dow is off 3%, no panic. Financial news, no panic. No markets in turmoil. CNBC special, no markets in turmoil special. Everybody just another day at the office, 3%. I'm going to spin you through the different market segments to see where the various segments are related to the 20 EMA. You can see I've got regimes set up for each one. Mid caps down around 20, but not oversold. NASDAQ 20, not oversold. Small caps 40, not oversold. And SPX 32, not oversold. Now, these change every day. So as I go through these, and you can recreate these charts if you want, or wait for me to flag them. But when we start seeing spikes in the VIX, our oscillators diving down to oversold. When we look at these measures here, diving down to oversold, we'll have some legitimate evidence that we may be nearing a tradable bottom. I don't see that yet. So let's get into the charts real quick. I want to hit gold. Gold continues to grind higher. Here's the weekly chart. Yesterday we took out this level here at about 184, moving higher, starting to act like a commodity. I think people are very underweight gold, and as the turbulence increases, I think people are gonna start finding gold even to a larger degree than they are right now. Here's the miners coming up on this 39 resistance. As I mentioned yesterday, if you're in this trade from lower levels, 39 would be a good place to reorient. You could either add to your position, hold your position here, and add another layer above, roll the whole thing higher, or, of course, do nothing and just let your trade proceed. But I still like the miners. Now, what I want to do on the indexes is kind of take you from a high level down to a granular level and impress upon you kind of where we're at and how you should be thinking about not only your swing trades but your intraday type activity. SPY weekly. In black are your Fibonacci retracements off of the COVID low. You can see we've got a well-established downtrend in the SPY weekly. We are below the 40-week moving average. That's bearish. RSI is bearish. PPO diving towards the bearish regime. And we haven't even had a 38% pullback of this monster move. So everything on this chart says lower. Below trend, below the 40, hardly any retracement at all in the whole scope of things. Coming in on key support down here at 410 on the weekly. Notice that was the February low. We've got a void in the charts. So on the weekly chart, you should be planning on or anticipating a test of this 410 at the prior lows. Bearish chart. So remember, the longer the time frame, the more important the signal. So if we've got a bearish chart on the weekly, that means any bullish move on the daily chart is by definition a counter trend rally. That's really important to take note of. So here on the SPY daily, yesterday we opened right up here towards what was the open? 431. Yeah, right here. And they sold it right out of the gate. Straight down. Wasn't panicky. It was just matter of fact. Boom, boom, boom. Closed on the low of the day. I think today you can use 420 as your pivot. We've got the February low just 10 points away. And then we've got a last layer here at 405 before a void opens up in the chart, which would, I think, result in a fast move down towards 390. Not a prediction, just giving you levels. But you have to admit, we're in a downtrend where price is well below all the moving averages, well below the 200, well below all the fast moving averages. I mean, it's a bearish chart. Bearish RSI, bearish PPO. You got a bearish weekly, you got a bearish daily. So, not looking that good. SPY 2 hour, not going to spend a lot of time here. Pretty evident, pretty clear. 420 is your pivot. I do have a little shelf here at 415, but then the February low comes up at 411. If things deteriorate or move quickly, don't be surprised if there's an overshoot of that February low. If we just kind of limp down there, then I think there's much more chance of a bounce right on the line rather than just blasting through. So you'll have to gauge acceleration versus just absolute level. So on the bullish side, I think you're depending on where we open, you could be long against 420 and look towards 425 as your first overhead level. If we happen to, I don't think we will, but if we open above 425, then you'd have your gap below and an overhead target of this downtrend line. But again, bearish chart, bearish RSI, bearish PPO with a recent bear cross right below the zero line. I think it's heading lower. 30-minute chart just gives you a little resolution on these levels, which is nice if you're a shorter time frame trader. Let's move on to the Qs. Very much the same look. Bearish RSI. PPO moving bearish. Rising wedge. Broke down below. Broke down below the 40 into a series of little bear flags that failed. Nice downtrend line to shoot against. This February low comes almost exactly in to the fibs at the 38% retracement level, down around 310. You can see here the 50% retracement level is down at 283. I would mark that on your charts. If you want to look at the 618 retracement level, it's 254. So you can mark that one down as well. It also aligns real well with this large volume over price bar here. So bearish weekly chart, I think it should be pretty clear. You've got a bearish daily chart here as well. Here's your February low. We do have an open gap to fill between 305 and 300. So I think on this run, we're going to get down and fill this level at 300. If you were short heading into that, that would be a place where I would be probably motivated to cover. It's either going to bounce, well, it can bounce any number of places, but depending on the speed of which things happen, if it limps down here, you're going to get a bounce off of the top of the gap. If there's some intense selling, it may just undercut that, go down and fill the gap, then give us a bounce. But below all the moving averages, below the downtrend line, bearish regimes on the indicators, it's a bearish chart. Qs, 2 hour. Easy trade yesterday. It opened almost right on your downtrend line and gave you a fast sell signal at 335, and then you got $10 out of it conservatively, not even saying, oh, I'm going to short right against the line. If you did that, great. If not, your first trigger was a break below this level at 335, then there was just no looking back whatsoever. Here you can see that resolution a little bit more clearly. Break from above, sell, another sell signal right down here at the close. IWM, we've been saying for a while, this is the most bearish chart. Why? Broke out of a year-long consolidation range, came down to 190, had a back test of the failure, very common move, and now has proceeded back down towards the February lows, and with a very well-defined downtrend line. PPO, well in the bearish regime. RSI, well in the bearish regime. You've got the 38% fibs here and the 50% lining up pretty well with technical support here at more or less 185 and then 168 down here. So just talking in round figures, a break of 190 targets 165 to 170. So bearish chart. We've been talking about this for a while. Bearish daily chart. Why? Bearish regime, RSI. Bearish regime trying to roll over here on PPO. Trapped in a consolidation box, but now working to the low side, having been rejected at the top of the box and near the 50. We've got a full bearish stack on the EMAs. Each faster one below the next slowest one. So 250, 28, price below everything. Bearish all the way. The level to focus on the big picture is this 187.5 at the February low. We tested that level just the other day. Same level, coming back down again. Then you got to ask yourself, do I believe in triple bottoms? The more you tap on this level, the more apt it is to break. So, bearish setup on IWM. Here is the detail on the 2-hour chart. Pretty clear. Opened right up in here. Gave you a sell signal at 198 and never looked back. Here you see the detail on it. We actually opened higher, reversed it right away, then broke down, and then straight down the rest of the day. At this point, I want to welcome any new visitors to the site, to the YouTube channel. I really appreciate it. What I try to do is identify key levels for you, give you key talking points to inform your narrative for the day, help set you up for success. If you're interested in that, please hit the subscribe button and the alarm bell. Keep you loaded with content each and every day. Jump over in the show notes. You'll find a link to register for all my content. So morning, noon, or night, with just a drop of an email, you'll get all my content sent directly to your box. You won't have to look for it. For both YouTube and written comment on the blog site, you'll get everything right there. We'd be glad to have you, and you'll also get an invite to the trading room. So just looking at yesterday, if you're an active trader, and I get these comments every once in a while. I don't take them personally, but I do want to make note of them. Why don't you cover this? Why don't you cover that? As a AMD or NVIDIA or name a name. And those are good names to follow, but any person only has so much bandwidth. And I choose to focus on the FATMAAN names because it's between 25 and 50% of the index. And if you can get that right, you got the thing pretty much licked. I cover ARC frequently. I cover the semis frequently. And so what I want to do is just kind of illustrate from yesterday on a 3% down day. And I hope you made a lot of money. I hope you killed it. At the end of the day, I hope you were proud of yourself. But if you weren't, I want to look at some of these names in hindsight to show you how productive even these large mega cap names can be on an intraday trading basis. Facebook, we all know what the back history is. We had this 198 flagged as a pivot point yesterday. It opened higher, broke below, and never looked back. From 198 to 187.50, $10 move, one trade, one entry, You didn't have anything else that you needed to do. So it was there. I'll show you the daily chart. I don't have it really worked up that well. I know there's a support level down at 180. So I think it goes down there where we'll have to see what the rest of the market is doing. But Facebook has already taken out the February low. So from that standpoint, there should be more selling pressure. The mighty Apple. Everybody's scratching their head, can we have a bear market with Apple totally unscathed? I mean, here's the all-time high right here. We're just right here. We're, the all-time high, let's just call it 182. We're only here at 160. Can you have a bear market with Apple just comfortably at the highs, nobody panicking, nobody being forced to sell, everybody just kind of hanging out? I guess it's possible. Anything's possible, but I think that's where the panic would come in if they really went after Apple, so widely owned, and get people to come off of it and then put in a bottom. But you can see here we're in a support zone between 161, 157.50, and we've got the February low down here towards 151. Get some resolution on it here. Yeah, or 153-ish. But as far as trading yesterday, we said 163 was your pivot at the top of the gap. Now, you're not going to get rich on a $4 move, but it was a trade to make. And if you're trading Apple and you saw the first candle reach above 163 and the second candle break below, that's your objective entry. That doesn't mean you're going to get a $4 move, but we did say on moves below 163, we favored a move back down to the bottom of the old gap, and that's exactly what we got. So today, 159 is your pivot. You've got a support shelf here at 156.5. Then below, you got the February low. If this holds, you've got an opportunity to go back up to 163. Tesla, same exact thing. We said 830 was the pivot. We said 800 was the target on the downside. And we said 860 was the target on the upside. So $30 move in either direction. You got a little open above. Then you lost 830. That was your objective sell signal. And you got a, $25 move? Something like that. So definitely there for the taking. You've got a little support shelf here at 800. I think that's your pivot. You break below 800. Not a lot stopping it going down to 750. If 800 can hold, there's an opportunity to potentially bounce back up to the 830 area. Microsoft, simple trade. Maybe you got it, maybe you didn't. We said 290 was the pivot. Had a reach above, then it let go. That was your opportunity to get short. Even if you didn't, you got another opportunity at 286, 287. Had another opportunity at 283. Finished on the lows. Now we got a low down here at 272. I think your pivot today is 278. May get a bounce there, back up to 283, or down to the February low. I want to show you the daily chart real quick. Putting the whole thing in perspective, you lose that February low. This was a level that we put in quite a while ago, but I think the door would be open then for an additional $10 of downside down towards 265. Looking at the daily chart, again, 100% bearish. Bearish regime on RSI, bearish PPO. In fact, just putting in a fresh bear cross yesterday below the zero line, that's bearish. Below all the moving averages, that's bearish, and including the 200 here at 294. And as we've discussed, if you're below all the moving averages, including the 200, you're on the wrong side of the chart if you're a bull. So, I mean, I think this at least comes down to the February low and probably even breaks it. Amazon. Now, there are no easy trades, but there are very objective trades and places where, looking back on a tape, you can ask yourself, what was I thinking? What was I doing? Did I lose focus? I forgot to make an alarm? Whatever the case may be. But this was another great trade. We had our pivot area identified in the pre-market. Price opened above it, and then it lost it to the downside. That was your objective entry. And then it just never looked back. I mean, down 163. That's a monster day. I mean, that can make your month with one or two contracts. But that's neither here nor there. But it was a great opportunity. You can see that we lost the February low. We're actually even lost this low down here. Let's look at the daily chart just for perspective. Big downtrend line below a $600 wide trading range. What we've said is if you add 600 to the downside from 2950, that gives you a measured move of 2350. And so we got 400 to go as far as that measurement goes. You can see here we've got this touch low down here at 2700, and I would imagine that would be the last stop if the bulls were going to try and save it. Google had the pivot identified, broke below, never looked back, down 4%. One thing that I thought was really noteworthy yesterday is we know the Qs were down 3%, but when you go look at the individual FATMAAN names, most of them underperformed. I mean, Google, underperformed. It was down 4%. The broad averages were down 3%. We just looked at Amazon, down 5%. Microsoft, down 4%. Facebook, down whatever it was, 3% or more. So there were a lot of big mega cap names that were hit a lot harder than the broader market. So I think that was noteworthy. So another very objective entry here at 2610. We had it dead to rights on our levels. Came down here, broke, back touched a level that we had well defined, and closed on the lows with the February lows now targeted. Here we are on the daily chart, just like all the other ones. Bearish, bearish. Price below all the moving averages, bearish. Testing prior lows. You break a prior low, more sellers come in, and it goes lower. You can see we've got a shelf here at 24.25. That would be my target on a breakdown below these lows here, and then we'll have to identify lower levels. Here I got a level at 23.50, so that's a couple of extra $100 to the downside. Netflix down 3%, broke the prior lows. Here we are in the weekly that we talked about. Here's that big bar right at, as far as I have it drawn here, at 350. You break much below that on a week closing basis. You got another void in the chart, and support falls away, and that would give price some room to accelerate to the downside. SMH, we talked about needing to hold this 254 level. We had the pivot set up, opened up, reached higher, failed, broke below, never looked back. That was another sector that underperformed, minus 5%. I mean, if you go look at NVIDIA, Micron, AMD, all the big names really getting hit. So that was a good trade to make, and an easy one at that, with the levels clearly defined. Yesterday we said it had to hold this 248 area where we had seen support back in the charts. Couldn't do it. We have a measured move target down at 240. I mean, it's basically there already. A break below 240 would target this 223 area, almost $20 lower. So set yourself an alarm at 240 and see if they can't stop the bleeding there. But like all the other charts that we've pointed out, price is below everything, below all the moving averages. Fresh bear cross on momentum, turn down on RSI, everything says lower. So it's going to take one of these support levels to hold, or else we go a lot lower. Going through some of our trades. Snap, we got short at 35. That's progressing nicely. Maybe a little bit of support here at 28 at the prior February low, but I assume it's going to fill the gap to 25. All the ARC names were down. FinTech was down 6%. Had the breakdown, rollover. ARC-G wasn't down that much, 2%, but we're below support here at 43. My base case is to come down, tag the February low at 40.5. Flagship fund undercut the February low, but then held. So if you're interested in using ARC-K as a proxy for Tesla, and you see Tesla breaking down, I would alarm 57.50 as a potential breakdown area, especially if Tesla breaks down, because if Tesla's going down as the highest weighting, ARC-K is going to go down as well. ARC-W testing the February lows as we speak. So that's going to be an important level. We can jump out to a daily chart just to show you. Yeah, I mean, we're down here. Can even go out to a weekly. Probably more germane. We're coming in to the breakout area from way back before 2020. And so we're coming to the point where if anybody bought that breakout and held on, they gave it all back. And what may happen is for the people that bought way back here, if we were to break below 70, then it's going to start, affecting them. And so they're going to see their profits wither away. And I'm just wondering what happens to these funds if there's, a big capitulation where redemptions are forced to occur in all these illiquid names that now nobody wants. The bubble names, the super high growth names that are characterized by the ARK funds. I mean, that's why I say, down 70%, no problem. We can still sell that and take it down 80 or 90% because, at this point, now the sentiment has totally turned on these names. So let's wrap it up there. Stay objective today. Looks like we got a little rally going on. So we'll see where that takes us. Remember what it did for us yesterday. It made it so there wasn't a big gap for the open, and then that enabled them to sell it right out of the gate. Maybe we have a bounce back day today. Hard to tell. I will keep you posted on what I see. Thanks for listening. Hope you got value out of the video. This has been Chris Butts with Traders Profit Compass. Talk to you next time.